I had 5 seconds to make a decision and I chose wrong. That more or less summarizes what people who usually bought in wrong locations in Dubai usually tell me. Got tricked in a shopping mall, called by a super persistent salesperson, or simply got worked on by the hype train and the fear of missing out. We need to change that. Fast, with strong backing data, investor insights, and lessons from mistakes in the past. I know I might get hate for saying some things as they are, but I share my very own opinions only, and I hope you will find them helpful. Also, as you can tell, I'm now back in Dubai and ready to share more insane investor insights and updates. So if you're interested in saving money, avoiding critical mistakes, and getting to actually understand where and how not to buy in Dubai, then hit the thumbs up button and let's get into the video. I don't want to structure this video around specific areas, although I will mention them and give accurate examples. Instead, I want to share a small bit of the investor mindset that will help you navigate this market with more confidence and seize the opportunities better, including whether the location is right or wrong. New areas don't always mean good opportunity. Some areas that were pretty hyped lately, such as Dubai South, Dubai Maritime City, Dubai Islands, and Palm Jebel Ali, some are good indeed, but it all comes down to checking the price per square foot and really mapping out that vision towards capital appreciation. A few years ago, I wouldn't even consider coming to Dubai Creek Harbor, let alone investing in here. And now, well, I live here. So it really comes to the perception of the market and playing the long-term game. Some areas like Dubai South could actually be super lucrative, but that might take a long time and require you to potentially lock that cash until people actually start moving there. And you, as a landlord, will start seeing good yields and potential capital appreciation. On the contrary, there are some community areas which, although remote, are already appealing to end users and investors. A great example is Tilal Al Ghaf, where I see more and more people, including my own clients, deciding to invest and actually live there. So occupying those properties as owners. Other areas like Al Furjan, JVC, and Town Square also show signs of stronger mid-term traction because they are already populated and livable. Growing organically, yes, maybe the supply is creeping in some of those, but at least you have a predictable future on your rental income. Secondly, not all launch locations from solid developers are actually solid. While MR, Shoba, Damak are some of the leading giants with usually really strong launches. And yes, I might get hate for mentioning Damak, but for the price they launch with comparing to all the others, let's face it, it usually pays back pretty well. Nevertheless, if we speak about MR and Shoba in particular, they generally launch amazing projects that are sold in minutes. However, lately I see a trend that even the fan-favorite giants don't hit the nail with every single project. Some of their launches are located super far, including areas such as the Dubai South, the Oasis, or the Valley by MR. And these are not necessarily spot on. Frankly, some are not even accessible in terms of location and also price, as some of them are focused on hyper-expensive villas that only a few people can actually afford. However, again, after doing the due diligence and comparing the available options versus the deal that developer offers you, could be MR, could be someone else. And most importantly, if we speak about off-plan and you are okay to wait until completion, it could turn out to be a great investment. You just need to know and draw your long-term strategy exactly so that you're not in a position of panic when the market might turn upside down. You need to be able to hold your assets. Shoba has also great developments going on, such as the Shoba Heartland, the One, or Shoba One, and a few more remote projects. But I personally am quite unsure of some of those located outside of Dubai, or even the recent one launched in Marina. Again, considering a good launch or price comparing to the ones currently available on the market, it could make 100% financial sense. But I've seen many offers even in the before mentioned Shoba Central, which in my opinion didn't make much sense when compared to some of the nearby projects. But I mentioned that I saw a couple of offers. There were also really good offers. So it really ends up to you who's going to get the deal, analyze it properly, and if it works, then go for it. It all comes down to the numbers, whether it makes actual investor sense. If you need help breaking this down, reach out for my advisory services or book a one-on-one call directly with me via the link in the description. You need to check what other developers are actually doing in the area of your interest. More specifically, you need to check what others are planning to be doing there. The project you are looking at, whether that's ready or off-plan, could be great, match your requirements, and even add up numbers-wise. But if nearby, giants such as Demak, Danube, or Shoba are already building or planning mega projects of 3+ towers, you might be losing out long-term, both in terms of supply competition and the offering quality-wise. For example, recently I was contacted by MR that they are starting their pre-sales at their Dubai land location, the Grand Polo Club. You might expect me to say it's not investable, but I actually don't necessarily agree. It could well be an amazing opportunity. Yet the point here is that it will shut the nearby projects. MR is generally faster, better, and perceived as more attractive. So if you already have an investment in that area or are looking at some of the competing projects, you need to count in other developers' plans as well. Don't buy assuming that you'll be the only option for the future tenants, because in that location, you likely won't be. This is especially relevant in areas such as Meydan, where there are so many developments, Dubai land, and even parts of Business Bay, let alone JVC, where massive new inventories are on the horizon. Don't buy in a location where you don't understand your exit strategy. Buying a villa somewhere with a first-line sea view could sound like a rare and must-have deal. But if you don't know how to capitalize or how you will capitalize on that, you might be making your biggest mistake. You need to know the plan before you buy. Is it resale before handover? Is it buy and hold for after handover resale? Are you planning on living there or renting it long term, or perhaps Airbnb and even monthly rentals? This, my friend, will impact everything. I recently had a client who was offered a 10 million plus villa, even further than Palm Jebel Ali, heavily pushed by a persistent salesperson. Smaller developer, not regionally known, limited track record. Even that is fine if the numbers work. But he had no idea what he wanted to do afterwards. So he reached out to me for some investment advisory service where we discussed and mapped out his actual intentions, what he really wanted out of this deal. And after that, we realized it was a huge mistake. He mentioned resale before handover, which in that specific hyper-remote area where nothing is built yet, no grocery stores, no ATMs, basically zero resale potential, at least in the next few months, as he mentioned, before handover. This was the road towards a highly potential, painful distress situation. Always know your exit. That's your safety net. And again, if you want to analyze those deals in details, I'm not biased, I'm not related to any developer. My investment advisory company, Agora Advisory, is offering tailored support and guidance towards your best investment in this region. Nevertheless, let me tell you about some extra red flags that you can't ignore. Don't buy based on future infrastructure alone. Just because an area shows road plans, metro plans, or mall mock-ups and other things doesn't mean that this will be delivered on time, so it could actually delay your potential capital appreciation and also your rental yields. Ask when is it actually happening and what will be the impact, or what would be your actual timeline. Give yourself some buffer always. Avoid zones with upcoming mega supply. At least if you're new to Dubai or this region and you don't want to risk it by just finding potentially even a great deal in those areas, such as JVC, Arjan, and some parts of Dubailand, then you need to be careful. The amount of new stock hitting the market can depress the rental yields for another 3 to 5 years. Hyper luxury in remote areas is risky. If you're buying a 25 million penthouse or villa, whatever, in an untested area without any neighboring competition, what are you doing? You better be very confident in your hold power and future buyer pools. There are areas with service charges that kill the returns. Some towers charge 35 to even 50 dirhams per square foot. That, as a comparison, is like double for even the Business Bay towers, which are already considered very expensive for service charges. In my own case, in Business Bay, I pay around 24 to 26 dirhams per square foot. So if you pay 50, that's literally double. That could eat potentially 20 to 30% of your rental income. Ask for the code and service fee data before you commit. No resale or rental activity could mean no liquidity. If you search on Property Finder and you see no listings or transactions for the area, that's a major warning sign, and you really need to take care of that. Finally, misalignment between your goals and the actual location that you're buying in. If you're buying a one bed for Airbnb, but there is no tourism around, or buying to flip in a resale week community, it's not the market's problem, it's your mismatch. Some more remote areas, such as Damak Hills too, they might actually be pretty good for rental income, but not necessarily for resale. But that's just one observation that I had, and it definitely applies to many other places. So again, it's not about the area being bad. It's about whether it makes investor sense for you right now. That's where you win or lose. If you want help evaluating a deal, understanding if a launch makes sense, or just need clarity on your exit strategy, you can book a call using the link below or explore my full service offerings at Agora Advisory. Nevertheless, I hope you liked this video and I really hope it was helpful to you. So for that, please hit that thumbs up button, subscribe to see more, and I'll see you in the next video.